we started to see the whole marketplace, not just silver and not just gold, but the whole marketplace, stocks, the dollar, started to pivot from fear of tariffs to hope for Goldilocks. And at that moment, we started to see, yeah, gold and silver both rallied and both sold off the same way. But over time, you could see the gold silver ratio went from 100 to 95. What I think is going on right now is the market is look at gold and silver. The market is looking at emerging peace, and everyone and their mother is unwinding their gold and silver. And so once copper breaks 520 on a closing basis, then I think we're going to see silver actually run a lot higher.
Vince Lanci, a veteran trader and author known for his insights on gold and precious metals, notes that over time, the gold-silver ratio has fallen significantly from 100 to around 90, signaling silver's relative strength. While daily movements might appear mixed, the broader trend shows silver outperforming gold as traders rotate out of gold and into industrially exposed metals in response to improving geopolitical and economic sentiment. The current ratio of 92, as of July 2025, stands significantly above the 25-year historical average of 66, placing it at an elevated level from a historical perspective. While not at the extreme levels seen during the 2020 pandemic, 125, the current reading remains in the upper quartile of historical observations. Analysis of 25 years of precious metals market data reveals a compelling pattern. Significant peaks in the gold/silver ratio have frequently preceded major upward movements in silver prices. This correlation suggests that the ratio may serve as a potential indicator of silver's relative undervaluation compared to gold, particularly when viewed alongside the current elevated gold prices. Vince observes that the market is currently viewing gold and silver through the lens of emerging peace, prompting widespread unwinding of gold-silver positions. He adds that if copper closes above 5.20, it could trigger a significant rally in silver. This connection between copper and silver prices reflects their highly correlated relationship, where major shifts in copper prices, whether upward or downward, often have a corresponding impact on silver, pulling it along in the same direction. The strong price relationship between silver and copper is evident in long-term charts of the silver-to-copper ratio, which has demonstrated remarkable consistency over time, despite fluctuations around its historical average of 6.39. Before we dive in, don't forget to like and share the video. Hit that subscribe button and turn on the notification bell so you never miss an update. Thanks to your incredible support, our community continues to grow stronger every day.
I mentioned something to subscribers in May. When Trump said he was going to double steel tariffs, we saw a weird knee-jerk reaction. And when he said that, the market kind of jerked to buy silver and iron ore and all those industrial type metals, copper. And that was because everybody was worried about tariffs, so they bought more. And I saw this kind of weird behavior. I saw gold sell off and silver went with it. And then when silver started to rally, it led gold, and gold underperformed in the rally. And so I said, this is it. This is the beginning, fear-based short covering. Let's see how it goes. And then, so nothing really happened. And then as the news started to come out that the tariffs were going to be put aside for 90 days, and Trump is in conversation with China, which he is, that's legitimate. We started to see the whole marketplace, not just silver and not just gold, but the whole marketplace, stock, the dollar, started to pivot from fear of tariffs to hope for Goldilocks. And at that moment, we started to see, yeah, gold and silver both rallied and both sold off the same way. But over time, you could see the gold silver ratio went from 100 to 95. And I think it cracks 90 today. No, wait, it's right around 90 right now. So it's at 90.4, give or take. So we've had it's been hard to see on a day-to-day basis. You're like, oh, look at that, gold's up, silver's down. Oh, look at that, the next day, silver's up, gold's down. But over the week and last month, you've seen the gold-silver ratio get bludgeoned because silver shorts have looked at this tariff situation and this potential resurrection of Goldilocks, and they're saying, time to buy industrially exposed metals. You can sell some of your gold now. Geopolitics too. So that's what I say. That confirms your technicals, let's put it that way. One of the things that I said a couple weeks ago, referring to China China investors have started buying platinum, and the banks were saying it's not worth that much. They're overbuying it. And my comment was, no, I don't think they get it. They're looking at platinum relative. Platinum's too high. Why would you buy platinum? And I'm like, no, Chinese investors aren't looking at platinum relative to platinum. They're looking at platinum relative to gold. And they're saying, wait a minute, $3,500 to buy an ounce of gold? I'll just buy 3 ounces of platinum. And that's what got this going. So I think the reason I'm bringing that up is because there's a similar formation. It's almost like gold is leading all the metals now. Gold did its thing. Silver has kind of like a cup and handle within it's not a cup and handle, but a cup and handle within a huge, ridiculous, almost like a soup tureen in a ladle formation. Anyway, I guess what I'm saying is gold seems to be leading all the metals out of congestion into bull market. What I think is going on right now is the market is, look at gold and silver. The market is looking at emerging peace, and everyone and their mother is unwinding their gold and silver. And so once copper breaks 520 on a closing basis, then I think we're going to see silver actually run a lot higher.
Vince notes that Goldman Sachs is bullish on gold, projecting $3,700 by year-end and $4,000 by mid-2026. They expect gold stocks to outperform the metal through 2025, driven by strong free cash flow and lower operating costs. This optimistic outlook is echoed by J.P. Morgan, which sees gold prices crossing the $4,000 per ounce milestone next year, following increased recession probabilities amid boosted U.S. tariffs and an ongoing U.S.-China trade war, the bank said in a note on Tuesday. J.P. Morgan now expects gold prices to reach an average of $3,675 per oz by 4Q25, on the way towards above $4,000 oz by 2Q26, with risk skewed towards an earlier overshoot of these forecasts if demand surpasses its expectations. This timeline establishes a remarkable consensus between two of Wall Street's most influential investment banks, with both institutions targeting similar price levels within comparable timeframes. Analysts at major institutions remain bullish on both gold and gold stocks, with consensus projections pointing to continued strength through 2026 as monetary policy evolves and inflation concerns persist. Let's get back to the video.
When you look at the three metals, gold, silver, and copper, I used to trade these three. I still do, but I used to trade these three literally against each other, risk arbitrage. Gold's overvalued relative to silver. I want to buy silver and sell copper. I want to buy silver and sell gold. And then I would also sell copper. So I would trade the three of them as a relationship. Silver was acting too precious. I would sell silver and I'd buy silver and sell copper. Things like that. It's like a three-way relationship. And I've lost a lot of money doing it as well. The really big players do that. So I'll give you an example. Nobody talks about it, frankly, except me, because I've had the exposure in it. You know who really knows about this as well? Jeff Gundlach, because he trades the gold-copper ratio. But here's your copper point. Whenever people think the economy is going to do well, they buy copper. Whenever people think the economy is going to do poorly, they buy gold. So they want these pure plays. And what they do is the sophisticated types will buy the gold and they'll sell silver because it's not purely precious. And so they would kind of like force it. And then when the economy is going to do well, a lot of them buy copper and sell silver because it's not purely industrial. And as a result of that, you get this silver like as an unwanted child, a middle child that gets abused no matter whatever people are looking for pure plays. I want a pure play on X. I want a pure play on Y, which brings us to now. Okay. Gold and copper had been too high relative to silver. Now what you're seeing is, as you're seeing it in gold, but you're seeing it in copper as well. If the U.S. traders think that the Goldilocks concept is coming back, low inflation, good economy, they're going to buy copper and they're out there buying copper. But there's more of them saying, oh shit, I'm long copper already. Let me cover my silver short. There's just too many shorts out there. And so I'm bringing this up for a catalyst. When the pressure if the market continues to move this way, Goldilocks, sell gold, buy silver, sell gold, buy copper, you're going to see this cap on copper stay in place for a while. And then silver will keep rallying. And then eventually copper will absorb all that selling, kind of like the miners are being sold into right now, and you'll have an explosion. So if you have a good technical level, then you should share it with us. 520 was your number. If that's a good technical level, then it's kind of like you're not long copper until it gets above 520, and you're long silver all the live long day. That's how I feel about it right now. First of all, they're bullish gold, okay? And that may change. You never know. But they're bullish gold to 3,700 for the end of the year and 4,000 by the mid-year of 26. And the quote excerpted from the report is, quote, while gold as a commodity has outperformed the equities over the long term, we've highlighted that there are cyclical periods of equity outperformance. We recently outlined our expectations for this gold equity cycle to continue, with gold stocks well positioned to continue to outperform the commodity itself through 2025, supported by two-pronged margin expansion, lifting FCF across the sector. The two-pronged margin expansion, basically gold is as high as it's ever been. Their profits from hedging are great. So there's your free cash flow, right? And the other one is they've got their operating costs under control, especially with low energy. So Goldman, in a rare bid, is out there saying buy miners. This is very early on for them to say that. And I bring it up as them being early on is because they can be early and wrong, but they're the second bank to do this now. Citibank did the same thing about 2 months ago, and you and I discussed that. But for Goldman to do it and already being bullish in gold, well, either we're all going to be holding their bags, right?
Gold performed strongly throughout 2024, reaching new all-time highs and outperforming several major equity indices, including the S&P 500, with annual gains of 27.2%. This momentum has continued into the first half of 2025, and silver has shown a similar trend to a significant extent. Gold and silver remain in focus as investors navigate shifting market dynamics and changing sentiment. Silver is gaining strength from short covering activity and rising expectations for industrial demand, while gold is supported by institutional forecasts projecting higher prices over the long term. The relationship between these metals, alongside copper and broader economic signals, indicates that silver may lead in the near term, while gold continues to serve as a reliable long-term store of value. Is silver finally ready to outperform gold and reclaim the spotlight in the metals market? Share your thoughts in the comments. Don't forget to like the video, share it with friends, and subscribe. Only 2.3% have subscribed so far, so hit that button and stay updated with the latest insights.